Hello everyone. In this video we are going to see about the second chapter of the economic survey of this year 2023-2024. The last video we have discussed about the first chapter, and this is the second chapter. In this video we are going to discuss about the monetary management and the policies of the money market instruments and RBI measures which have been taken in the past year. In the last video I have discussed about the basics of economic survey, that is what it is, economic survey, why it is, and who publishes it, and when it is published, and how economic survey is useful for our UPSC preparation and other states civil service preparations. And I will also explain the flow of study which we are going through. Let's go into the second chapter. I suggest you to watch the first chapter of this economic survey, and then come to the second chapter. I have also provided one-pager notes for every chapter, so that it would be easy for you to revise and replicate in the answer sheets during the mains examinations or other papers. Let's get into it. I will also attach the PDF of the one-pager notes in the description box. Let's get into it. In the second chapter, they have mostly talked about the financial intermediation that the banks are performing in the money market. Let's get into the concepts. To those who are all new to this video, I will explain. I have been segregated the chapters into the concepts which are discussed in the second chapter, then the data and organizations are the reports which are published, then the schemes which are mentioned in this chapter. First, let us see the concepts which are discussed here. They have discussed about the MPC stances, like the Monetary Policy Committee, where the RBI Monetary Policy Committee is there, where the 6 members who decides the policy repo rate and the inflation control measures. So the monetary policy stance are divided into 3 types, that is the accommodative stance, then the neutral stance, then the calibrated tightening. By the word, you can assume that the accommodative stance is that the RBI, that the monetary policies can be accommodative, that it can accommodate the money supply. Then the neutral stance, that is neither increasing or decreasing the policy repo rates. Then the calibrated tightening is they are increasing the repo rate so that the money supply is getting controlled. Then the money supply instruments like M0, M1, M2, M3, then the money multiplier. M0 is basically called the narrow money, then M3 is called the broad money, then the money multiplier, which is the broad money by narrow money, which gives the money multiplier, that is how much the money multiplied for the particular M0. Then the LAF corridor, that is the liquid adjustment facility corridor, which is basically, it includes the repo rate, then the marginal standing facility rate, then the standing deposit facility rates. Here the highest rate is the marginal standing facility rate, which is greater than the repo rate. Then the least value of the corridor is the standing deposit facility, which is lesser than the reverse repo, or which basically is nowadays replacing the reverse repo rate. Then the lending rate, which is the banks which are lending to the corporates or other credits institutions. Basically they are following some external benchmark lending rates which directly depends upon the repo rate or other policy rates. Then the marginal cost of lending rates are practiced in the economy. Then the capital to risk weighted asset ratio, which is also known as capital CAR ratio. The capital to risk asset ratio is determined by the Basel Committee, the Basel 3 norms, which recommended about the 8% for all the banks, which is of course followed in India also. For in India, the settled commercial banks are following 9% of capital to risk weighted asset ratio, and the NBFCs are required to follow 10%, and the public sector banks are required to follow a 12% of capital to risk weighted asset ratio. Then the India Stack, which is the digital public infrastructure which is created by the government. It includes 3 layers, that is the identity layer, then the payments layer, then the data security layer. Payments layer, you can link it with the UPI. In the identity layer, it can be linked to Aadhaar or some other identities. Then the data security layer. Then other are, next one is the primary market and the secondary market. Mostly this chapter is mostly dealt with the financial intermediaries like the money markets, instruments, and it's the primary market, capital market, those things. In the primary market is a place where the initial stocks or shares are being listed or sold out. For example, IPO, the initial public offering, are made in the primary market. And secondary market is the same shares or stocks are getting exchanged, but after the second time. For example, the FPOs and other stock exchanges, we all know that the stock exchanges like in the National Stock Exchange and Bombay Stock Exchange, these are examples of the secondary market. Then we have the qualified institutional professionals, like they are the qualified personnels who are in the primary or secondary markets. They did the criteria for them is like they have a high net worth, and they did not directly get listed in the stock exchanges. They can directly exchange the shares or stocks between the commodities. Then the T+1 settlement cycle and the T+0 settlement cycle. Previously we were following the T+1 settlement cycle, and somewhere we are following the T+1 settlement. That is the day when the stocks are getting exchanged within the 24 hours. That is T+1, the 24 hours, the commodities between exchange and the amount should be received between both the parties. In the T+0 settlement cycle, the SEBI, the market regulator, is trying to fasten the process and getting to exchange or settle the process of exchanging within the same day of where the exchange is done, which is basically to reduce the manipulation and the speculation in the market. Then the clearing corporations are they're the basic regulatory organizations which regulates the exchanges between the one player and the other player, so that there is a smooth flow of shares and exchanging derivatives. Then the derivatives are like which derives its value, where the value is derived from. The derivatives are directly divided into currency derivatives and the commodity derivatives. From the word you can know that the currency derivatives are which derives its value from the currency which is there. For example, the dollars, the euro, then the SDR, which India is holding as a forex reserve from the IMF. Then the commodity derivatives are like which the commodity, the product which is holding the value derived from there. For example, in energy there is the fuel and the crude oil. Then the agri products are some of the basic commodities which derives the value so that it can be exchanged. Then there is another concept like OTC, that is over the counter derivatives, where the two parties which are exchanging the derivatives or need not directly getting enrolled in the market. They can directly exchange their commodities and the value which is fixed. Then the SIP, that is the systemically important banks. These are some of the basically, that is to say, they will say like they are too big to fail. These are the banks which are too big to fail. Like they have a big market presence, they have a high commodity value. Like these are some of the banks which are recognized all over the world, so it's too big to fail. These are some of the SIBs. In India, they are the like SBI, ICICI are some of the systemically important banks. Then the social stock exchange, like the normal stock exchange, here it's like for the social good, people who are putting their money for the social causes. They are called as zero coupon, zero principal instruments. For example, like the green bonds which people are investing for the environmental, reducing environmental pollution. These are some of the social stock exchange measures, and they are also donating for the social sector development like health, education, and poverty reduction. These are some of the measures which through the social stock exchange these are getting regulated. To say simply, they are like the donations which are made, they are tax exempted by the section 80G under the section 80G of Income Tax Act. The eligibility for the uh, for the stock exchanges are like they should have a 3 years field experience. Example, like the NGOs which are performing well in a particular field in the social sector, then they should disclose the information, that's the financial information, within the 90 days of their listing. Then the insurance penetration and the insurance density. Insurance penetration, first come to the density. Density we can relate this the word with population density, so that you can link it with population. Like insurance density is how much insurance premium the population taken. This is the insurance density. Then the insurance penetration is with respect to the total amount of premium with respect to the total GDP of the country, which is the insurance penetration. These are some of the concepts which are discussed here. Then let's go to the data and organizations. The gross non-performing assets for the scheduled commercial banks have been significantly reduced from 14% in 2016 to 2.8% in 2024. I have been codified these data which can be used somewhere in the mains answer, so that it will be useful in the future. It might change, so get updated with these data. Then the surface, then IBC, asset reconstruction companies, insolvency, bankruptcy code. This is some of the basic security asset reconstruction process during the asset acquisition, insolvency process, and the reconstruction of the assets. The IBC have successfully completed the process of around 269 cases, which is significantly reducing the bank's pressure. Then the asset reconstruction companies like National Asset Reconstruction Company, then the Indian Debt Resolution Company Limited are being framed. Then the Global Financial Inclusion Database released by the World Bank says that in India around 77% of the adults, that is greater than 15 years, have accounts. These are like some of the financial inclusion measures which can be quoted in the intro or conclusion of the answers. Then the microfinance part, the Sadhan is a portal created as a self-regulatory organization for the microfinance institutions, and the SHE and self-help groups and bank linkages program are also carried out. Then the Financial Inclusion Index, it's an important report released by the RBI. It includes 3 categories like access, usage, and the quality. Of course, the usage has the highest weightage of 45%, access is 35%, and the quality is 25%. It's an important report which significantly tells how much financial inclusion is done in the economy. Then the IFSC Gujarat, the International Financial Services Center, which is also known as the Gift City in Gujarat, which basically acts as an instrument, acts as a center where the international finances and the foreign development FTA, FPA are regulated to increase the foreign investments and the growth of the economy overall. Some of the conditions are like the IFSC Gujarat, this center is declared as a non-residential zone under the FEMA Act, that is the Foreign Exchange Management Act, so that there is a surplus flow of foreign investments. Then there is also an allowed of 11 currencies can be transacted in this IFSC Gujarat. So these are like some notable points. Then some of the schemes discussed here are like clean note policy, which is that the RBI has taken to withdraw the 2000 notes from the circulation. It's a basic measure. And then the Kisan Credit Card Scheme, that is the rupees 6,000 credited at 3 intervals to the farmers, Kisans, it's a direct benefit transfer for subsidy or an input on the input side of the farmers. Then the Open Credit Enabled Network, it's a decentralized digital public infrastructure for knowing the for the market investors to know the flow of shares and stocks which are being sold in the market. Then the MSMEs to have the trade receivables discount scheme on the Udyam portal, which is for the registration and the free flow of the MSMEs. The trade scheme is basically the, for example, if an MSME is there which is exporting some products at 100, then the 100 rupees is being registered, and there is some discount at the from the government side, so that there is a boost in exports. Then the credit guarantee scheme, that is the assured payment for the exports. It's a credit guarantee scheme. Then the UAP is the Udayam Access Portal, which is basically for enhancing the informal micro enterprises which are out of the ambience of the MSMEs, micro and small medium enterprises. I would like to suggest, I would also like to recall the micro, small and medium enterprises. Their values like the 5 crore, 10 crore and the 50 crore of net worth and their investment, so that it would be easy to clarify them. Then the RBI measures like UPI 123 Pay, which is for the featured phones financial transactions. Then the UPI Lite, it's important to note that UPI Lite is under the National Payment Corporation of India, which is a non-governmental which is a corporation formed under Societies Act by government plus sponsor banks. Around some 10 banks are there which are sponsored for the creation of this company, National Payment Corporation of India. It releases the UPI Lite, which is basically there is no internet, so internet is needed for transactions, but for a low value transactions around less than 200 to 2000 rupees, for less value transaction UPI Lite is used. Then the Project Nexus is a retail cross-border payment system which the RBI has recently joined. Some of the other countries like Asian countries like Singapore, Malaysia have also joined in this Project Nexus, so that it will be easier for the retail cross-border payments, for also including the remittance payments and other transfers. Then the digital financial inclusion, some of the measures have been taken for the digital inclusion of public or the UPI Unified Payment Bharat QR, then the DigiLocker, eSign, account aggregator, then the ONDC open network, digital commerce. It's like basically the Flipkart or Amazon which are in the market. To counter this, it's like an Indian product where the retailers and the sellers and the consumers can directly post their products, and it can boost the local economy. Then the National Pension Scheme and the Atal Pension Yojana for the older sections. Then the Insurance for All scheme by 2047 under the Insurance Regulatory Department of Authority of India. It includes it's just a scheme which get to know this. It includes the Bima Sugam, Bima Vahak and the Bima Vista. Bima Sugam is a portal which includes it's a portal which maintains all these insurance claims in a digital way. Then the Bima Vahak are the intermediaries who are performing, that is people who are getting the insurance to the people, like some of the SHGs, social self-help groups, are like people who take the insurance product to the people who are basically acting as an intermediary. Then the Bima Vistar, which is the all-in-one package which includes the life insurance, then the accidental non-life insurance schemes, then all in one place is the Bima Vistar scheme. Then some of the keywords which are here are the financial intermediation, The thing which I have been mentioned the keywords here is for using it the intro and conclusion of the answers. It's better to prepare the keywords in some basic keywords, so that under the 3 hours writing the 20 questions it's so difficult. So it's better to have some basic keywords so that it can be ready-madely used wherever. The financial intermediation, like the banks which are performing between the consumers, then the MNCs companies which banks are performing, then the credit dispersal, twin balance sheet problem, that is between the corporate's balance sheet and the bank's balance sheet. When both gets troubled, it's known as the twin balance sheet problem. Then the addressing financial distress of the market. Then the financial inclusion. Financial inclusion is a basic term which is for the sustainable economic growth, reducing the inequality, then the poverty elimination. National strategy for financial inclusion is a measure taken by the RBI. Then the SEBI goals are like sometimes the questions have been asked in the capital market areas mostly. So it's better to prepare some points related to the SEBI have mentioned its goals as market regulation, investor protection, then the market development. They have also took some measures in this area, like the scores portal, which is the SEBI complaint register system for the grievance redressal mechanism of the investors. Then the market development, they have developed a smart program for educating the investors. Then the judgment based, it's like a quote, like the bank should have to move from the judgment based lending to the creditors to data based lending, so that there will be a better credit dispersal and also reducing the NPAs of the banks. That's all. This is the video. I will also recommend you to watch the first chapter on this section. So I will also pin the PDF of this one page notes. Kindly use it. I will also suggest you to watch the video in 1.25x or 1.5x so that it can be completed as soon as possible for you. See you in the next chapter. Thank you.